Nvidia's much anticipated earnings results this week is putting just another spotlight on sky-high demand for advanced chips produced here in the U.S. But China's advancement in older or legacy chips is beginning to raise some alarms here for investors. Joining us now is our very own Akiko Fujita. Hey, Akiko.
Hey there, Shana. Yeah, legacy or foundational chips are defined by the Commerce Department as nodes that are 28 nanometers or larger. And they're considered foundational because they are critical to nearly every device we use. We're talking about smartphones, household appliances, medical devices, even military equipment. And new data points to China rapidly ramping up its production capacity there. The country is now on track to install 3 times as much chip-making capacity this year as all other countries plan to do over the next 3 years combined. And that is according to data coming out from think tank Silverado Policy Accelerator. That means China is likely to control roughly 40% of overall legacy chip production by 2027, according to data from the Rhodium Group. Now, that is raising 2 key concerns here: overcapacity and national security. Experts I spoke to say the ramp up isn't tied directly to demand, and the fear is the Chinese will flood the global market with cheap domestic alternatives, leading to a price collapse, much like we've seen in the solar industry and steel industry. Chinese chip makers like SMIC are reportedly already selling chips at a roughly 30% discount to similar chips that are offered by global foundries and Samsung, and they are finding success in wresting market share away from some of the major players there. Now, on the issue of national security, the concern is that China is stockpiling these chips to gain leverage and counter any additional export controls that the U.S. and Europe imposes. So remember, the U.S. has all but banned American firms from shipping advanced chip-making equipment and chips to China, cutting the country off from the most cutting-edge technology, like artificial intelligence. The problem is those advanced chips can't work without the foundational chips. The two go hand in hand. Now, the thinking is China can withhold shipments on those critical chips if Western countries cut off further access on new technology. The Commerce Department has already begun a review to track how many of those chips are being used in American firms. The Defense Department has already banned the use of these semiconductors, although that ban doesn't take effect until 2027. In the meantime, the national fund that's central to China's efforts to build out its domestic chip industry plans to raise $40 billion in addition to the $52 billion it's already raised. Insiders say the key here is for the U.S. to work with allies to build out manufacturing capacity that rivals that of China's. But it's hard to match the dollars here because of China's industrial policy. The CHIPS Act has largely been focused on building out the country's advanced chip-making capacity. Commerce Department has announced $3.4 billion in investments so far on the legacy chips, but that is 1/3 of the money that has been going towards the advanced chips. So that points to sort of this unequal production, at least that we're seeing between the U.S. and China. And of course, we've been talking so much about advanced chips, and Commerce Department really focused on cutting off the supply there. But those who are within the semiconductor industry say watch the legacy chips really closely, because that is still largely what is being used globally.
All right, Akiko, thanks for bringing us your original reporting on that. Really appreciate it.